Visionary Investor Podcast. I'm your host, Andrew Marks, and I'm a stock market wealth investment mentor, speaker, and entrepreneur who has a passion for all things stock market investing, diving deep into quantitative and qualitative analysis, creating formulas and calculations that optimize stock market investing, and creating a life that fits your biggest and wildest dreams. You're in the right place if you're ready to tap into some investing strategies that aren't taught without getting a degree, working for an investment firm, and some that aren't even taught anywhere else in the world. Find deeper clarity on your investments and what your future can hold. Strengthen your understanding of recession, stocks, and your money, and learn the tools to accelerate your investments and wealth. You're here to be a visionary investor, not an average one. A passionate disruptor with uncommon goals in the investing world. It doesn't matter where you are in your investing journey. You're never too late to become a successful investor, and I'm here to help you do that. Let's get into the investing flow. Welcome to this new segment we have here called Stocks, Home Run, or Strikeout. What would you do with this stock? We're going to look at two stocks today. Apple, ticker symbol AAPL, and Amazon, ticker symbol AMZN. Stay to the end of this episode and you'll hear my rating on these two stocks, whether they'd be a home run or a strikeout. This episode is going to be more like batting practice and will get refined more and more, so eventually we get to the World Series. If you want to choose a stock for the next segment of Stocks, Home Run, or Strikeout, either send me an email at support@thevisionaryinvestor.com or send me a message on Instagram. What we're going to do here is this is a first level analysis that you can do in order to figure out if a stock is potentially good for your portfolio and your goals or not. Think of this like a screener for stocks. All right, let's start off with Apple. Apple is in the information technology sector, market cap $2.7 trillion. The 5-year annualized return was 32.6%. The 5-year risk, which is looking at downside standard deviation, essentially fluctuations that were negative returns, was 16.2%. So the risk-adjusted return here was 1.7. We also went over to Glassdoor and took a look at the CEO rating, which was 91%. The company rating was 4.2 stars. And when we took a look at the company's 10K for 2022, we noticed an increasing EPS, earnings per share trend. Now let's take a look at Amazon. Amazon is in the consumer discretionary sector, market cap $1.2 trillion, 5-year annualized return 6.1%, 5-year risk 18.8%. Again, that's looking at the downside standard deviation or the negative return fluctuations. Risk-adjusted return 0.06. That's a big difference than what we saw with Apple. Glassdoor CEO rating only 74%. And company rating 3.8 stars. Earnings per share in 2022, they actually had a negative earnings per share, so the trend right now is down. Now, before I share my opinion of these two stocks, keep in mind this is only a first quick pass through, and this is my opinion. This is not financial advice. This is for educational purposes only. Make sure to do your own due diligence and research further. See if these are good investments for you or not, based on your goals, based on your specific investments, and this is going to look different for everyone. So in my opinion, based on this first level of pass-through, Apple would be a home run, Amazon would be a strikeout, and here's why. Apple obviously has had a strong risk-adjusted return, which means we've seen higher return levels than risk over the past 5 years. Couple that with strong CEO ratings and earnings per share been growing over the past 3 years. That's a great sign to me. I would definitely want to do more research from here, but that looks good. Amazon, on the other hand, this story does not look so great. We're noticing that there's a lot higher risk level over the past 5 years than the return level. So that's why our risk-adjusted return was very low, almost zero actually, and even lower than the S&P 500's risk-adjusted return, which is about 0.34. On top of that, Glassdoor CEO rating, not so good, 74%. I like to look at anything above 80%. And even further, earnings per share, it was negative in 2022. If you look through the 10K, we're noticing that 2022 expenses were high compared to the previous years. And sure, they could be planning for the future, but personally, I believe that Amazon is a strikeout. Also, make sure you keep in mind past performance does not predict future performance, but what we can do with this is understand the trends that the companies have gone through, how management has handled the company, and whether that's led to the company's stock outperforming or underperforming, and how the company has managed risk. At the end of the day-to-day operations that both the employees and management do impacts the company over the long term. And if management's not doing a great job managing the company, that can definitely show in the stock price. Thanks for listening, and don't forget to subscribe to the podcast, leave us a kind review, and follow us on all other platforms at The Visionary Investor.